All right, up, everybody? New lesson being taught today. Well, I can't even say new lesson. Most of you guys know it. I think you do. But does anybody here know what supply and demand is? Or how to draw it up?
I believe I do.
Sweet. Because if you don't, how about Zachariah and Veronica Smith? Do you guys understand supply and demand?
I don't know.
It's basically like buyers versus sellers and how much are currently in the market, no?
Yeah, so the easiest way I can explain it, supply and demand is literally support resistance, but instead of it being a point or a line, it's a zone. So it's an overall zone of where price can consolidate, break through, or pull back and reverse. All right? This is what banks use. Banks use zones. This is how they accumulate, right? So depending on what time frame that zone is located in is also dependent on where certain patterns. So like if you guys look at Head and Shoulders, for example, Head and Shoulders has 3 pushes, right? The left shoulder, 1 push, the head, 2nd push, the right shoulder, 3rd push. That zone of where the head and the 2 shoulders meet is actually a supply and demand zone on a higher scale. So it's not just because they're hitting those 3 points, it's actually a supply and demand zone where price and buyers or sellers, depending on which pattern it is, are trapped. So they're going to continuously form the pattern in these zones, and then they'll throw it against all the people trapped in that zone to collect their money. This is why supply and demand zones are beautiful, because if it's not, and this is why I tell you guys to wait for patterns to form. And this is why I tell you don't just, oh, it's divergent and sell it. It could be divergent as shit for weeks and continue in the same direction. But what dictates it is the overall pattern, where it's at, if it's in a supply and demand zone. And if it's not, you're going to continue to go with the direction it's going. So the supply and demand zone, they're really easy. Really easy. Instead of going based off of not at the moment. I'm on a call. It goes based off of, it's kind of the same thing as you're looking for like supply and demand zone. So for example, like this, right? You see that this line right there is a support zone. It's worked here, here, here. I guarantee if we bring it back on the 4-hour, we'll also see that it's worked in multiple areas. Look at that right here. So that support zone can be a supply zone. Watch. Let's zoom in. So the way I do it, why does it keep doing that? Okay. The way I do it, guys, is you see me draw these boxes sometimes? See how I draw these boxes like that? First off, let me change the color because now it's not black.
Is there a reason why it's not black? Just to have a look.
Why it's what?
Why it's not black? You just changed the look of it or what?
Yeah, I just had to change the look of it. Got a little bored of the black.
All right.
Let's try the aqua. Is that going to mess with this? It is going to mess with that. All right, cool. Trying to find the perfect color. It's not too bright, not too dark. It's a gray now, so it needs to be a lighter. Like this. What is this? Aquamarine. That could work. We'll do that. So simply, what you do is you start the box at the bottom of that pin right there, and normally you would take it to the next candle. So you see the next candle after that doji is like that blue candle. Normally, you would take it to the top of that blue. And then what you do, let me actually draw a line here so I know exactly where it is. You take that and you drag it across, right? So you can literally just drag it across. Let me get it over here. Really? Sometimes they're a pain in the ass, but it's all good. The point on which I'm trying to show you, this is just long term, but you don't have to do it long term. You can do it from short term, and then you can adjust it from there. This works on any time frame. But you see how supply and demand works right here? So let me get rid of this. Let's zoom in. What happened? See, this supply zone is from all the way weeks ago, or months ago, I should say. This is the 4-hour. This is back in November of last year, and look what happened. It hit that supply zone, and it reversed and went back towards that water and then continued back down. Then what? It came back, retested that supply zone, and what happened? It continued. It's just letting you know that this is potentially where price is either going to reverse, consolidate, or head up or continue through it. So here, what are some indications that we could have used to predict that this was actually going to shoot up? Well, it's been divergent, right? So the divergence that I like to look for is it's completely oversold. It's been shooting down for a few weeks, few days, depending on the time frame, and it hasn't hit the water yet, right? Because what I taught you guys in the last lesson was the perfect pullback zones. How to tell if it's a complete reversal. You need to look for it to break the water, right? If it doesn't break the water, what is it going to do? It's going to continue. Now, gold is a little different. It's more technical, so I can't say that this is going to be perfect because it can break that water and continue. But in this case, it was divergent. The only thing was to tell that this wasn't actually going to be a full-on reversal where price, instead of it breaking down to this end, instead of it doing that, where it could have been like up to here, then back. What's the difference of how we're going to be able to tell that it was going to do this or if it was going to continue? Well, that's based on this divergence. If you notice, the divergence started right here. The full divergence started at this point. The problem is, the way I teach and the way I trade, is if the RSI, which is this green line, is not outside of the volatility band in the beginning, where the start of the divergence is, this is not valid divergence to look for reversals, because the ones that are popping outside of the volatility band, the ones that start outside the volatility band and then become divergent, those are the primary reversals. See how this one was inside? That one was inside. What did it do? It reversed, but only to the water. And when that happens, when you see that type of divergence where the volatility, where the RSI is inside of the volatility band, that is telling you it will reverse, but it's a pullback. So this is the 4 hour, right? That pullback is always to what EMA? It's the water. The water is always going to be the first time that's literally any time it reverses, the first EMA it's going to is the water. What happened? It shot up and it consolidated on that water for the rest of that week. Then it did a false move week beginning, trapped the buyers, and it continued down. Why? Because the divergence in here was not outside the volatility band. That means price is still valid inside for the sell, and it continued and it shot back down. But that zone of how you can predict it and where is it going to go after it shoots back down? To that supply and demand zone. Okay. So that's how you draw up supply and demand there. I'll even show you guys some more examples. And the best way to kind of map it out is to first initially draw the actual supply and demand or support resistance zones. Right? You can do that. You can draw the lines here, here. You can draw the line here. Let's see if it works back over here. Ready? Oops. Zoom out here. So we got this price. 1, 2, right? Let's see if it worked. Look where price hit. This is from the past. I just drew that line from what? Beginning, technically from a month or so ago. Look where it tested. This is back August 2nd last year. Or maybe even later than that. Was it? Yeah, that was August 2016. The last time it tested it. Right here. So what you could have done, if you really wanted to draw this out, taken this, stop. You could have drawn 2. Drawn it from this line. And instead of that one candle, because of where it's at, you actually could have drew it all the way across. And notice, this is a zone. It doesn't have to be an exact line. So how do you draw this out? Let's just, for time's sake, go to the daily. If it wants to click. There we go. I'm going to draw this out for you guys. Look at that. Do you see? 1, 2, 3, 4 times it stayed on top of this supply zone and it hasn't broken. Even here, 1, 2, it broke it. Now what's the next supply zone? Now I'm just going to save some time by looking at this, ready? You could have drawn from here. Start with the support zone. You place it there. Draw it up to like where the consolidation ends. Draw it all the way across. What's it hitting right now? It's hitting the next supply zone, right? So you can now look at this on an overall perspective. This is off the daily, right? So the higher the time frame you do it, the more accurate you're going to have it on a lower time frame. So this is in a very organized way. Here's the next supply zone. It worked back in January 2017 and June and July 2017, and it's now retesting that zone that it hasn't touched for over a year. So what's going to happen? Can anybody tell me what's going to happen in this? There's 3 things that can happen. Now it's going to hit the zone. What's it going to do? Anybody?
Say it again. Sorry.
I said it's coming up on a supply and demand zone right now. Ones that I just drew from back here.
Yep.
What's it going to do when it gets to the zone? What are the 3 things that it can do?
It's gonna
breakthrough.
It could become a reversal. That's one. What else?
break and retest.
It could break, retest.
Or just consolidate between those two.
Exactly, right? So you got those 3 things. It's either going to reverse, break it, or consolidate. How do you know what's it going to do? You don't. So what do? You wait, right? Or you look for the indications that start telling you, hey, this could be a reversal. What's one thing that I look for every single time I trade that could tell me that this might actually be a reversal?
Divergent.
And what do we see here?
Divergence.
It's divergent. So what could possibly happen? What are the better chances of happening right now because of that?
Reversing.
Reversing. But before it reverses, it has to consolidate. So what this means is y'all are waiting until it fully hits that zone. But let's just say we're not a little impatient. This is off the daily. Mind you, this is the daily. So this isn't supposed to make you trade tomorrow and be like, oh, it's going to be a buy. This is when you start understanding, hey, it hit this supply zone. It's divergent on a higher time frame. It's not just going to reverse tomorrow. It's going to do some shit on the lower time frames before it does it. So what do? We start breaking it down. You go to the 4 hour. Is there a pattern? Is it divergent? Has it been consolidating long? Are they trapping traders? Or where's the support resistance zones? Cool, we found it, but I still don't know exactly where to enter. Go to the hour. Don't know where to find it? Go to the 15. You guys can catch easily 20, 30, 50 pips on little shit by defining supply and demand zones, breaking it down into the lower zones. Because now we know exactly where we're at. So let's go to the 4 hour. 4 hour is now what? So we had the overall daily divergence here, right? It's divergent here. Starting where? At this zone, and it's outside the volatility band. It's completely oversold, giving us the good indication that this thing could reverse, right? Let's go to the 4 hour. What else do we see? I see more, again, more divergence. We got price coming down here. We have price starting over here, outside the volatility band, on oversold, right? So there's double divergence. What do we look for on gold? What is gold? Gold's a very technical pair. It does a lot of M's and W's. So what potential patterns could we be seeing right here? W's,
W.
head and shoulders, right?
It threw a nice M last night.
It threw a nice M.
Yes, sir, on the 1 hour.
Yep, right here, right at the top. 1, 2. What? I actually got to change this real quick. I got to change the color. I did change the color. I think I did. Yeah. Okay. So this line that I have drawn up here is the 144. Look, it bounced right off of it last night or 2 nights ago. Came up through a nice M and dropped back down, but it still has to touch that zone. Notice it's not divergent on the hour right here. So what does that mean? Continued shot back down into this oversold zone. into this supply zone, into the for possible consolidation or double bottom. Or this could be the left shoulder. This could be the head. You see that reversal come up, breaks that water, come back down, retest it, shoots back up. You have the right shoulder. Now present, right there, for a nice reversal up to that 1 hour blueberry, which is the 4 hour water. Is that making sense?
Yeah, it makes sense.
So supply and demand is not the overall indication to take trades, but it is a very indicator. The more indications you have telling you it's going to go in a specific direction, the better idea you should get understanding what price and what price is going to do that day, week, month, or year. You can do this on any time frame. Shit, if you guys want to go down to the 15-minute, shit, you can do that. If you guys want to be scalpers or intraday traders, what do? Go to the recent support or supply and demand, most recent resistance and support zones, and you draw it across, right? So that's the next zone. How do you draw another one? Oh, here's a zone. Where's another one? Here's a zone. You see what I'm saying? It could be drawn anywhere. But the higher time frames are the better because they're most accurate. So if price were to reject here, if price was to reject right here, which is this support zone, what could it do? Go up to that next supply zone, right? Gives you structure, which is also lined up with what? The water, the 144, and the Mayo. Letting you know that, hey, it's an extra confirmation. If it rejects here, it's at least going up to this zone. That's when you can break it down to exact support resistance or the EMAs if you use them. Does everybody here use these EMAs? I know Greg, Darius, I know Zach does. Raymond, do you guys all use these EMAs that I use?
Oh yeah, for sure.
Okay. So that should give you, like, it's a better idea, right? So it's rejecting the supply zone. Now me looking at this, it is a little divergent on the 15-minute. But here's the thing. What is that? What else do you guys see? I don't see it outside of the volatility band. That means inside. Meaning if this pushes up, it's only going to hit that water. Then what? Go back down into this zone to not break this low, to retest it, and then shoot up. So that's what you guys are going to be looking for on this. And where is that next shot? Look where I just drew it. See how I shot it up to here? Then what? It retests that recent support or recent supply and demand or the water. So it makes it a little bit more structured. So you guys know exactly where you're playing this.
Oh yeah, they're really helpful.
Oh yeah. So you go to other pairs. Let's try GBP USD. Haven't done this. GBP USD broke out. So that's dope. You guys can draw supply and demand on the daily, the weekly. I suggest if you're doing it from a higher time frame, 4-hour daily, weekly. That's it. You don't need the monthly. There's just too much clutter going on. I would recommend the 4-hour and the daily, ideally. If you want to do the weekly, the highest I would go is the weekly. That's it. But the 4-hour and the daily are perfect for supply and demand. So here's the weekly. This is the highest I'll go. Well, actually, I'll go to the daily. Because I need the most recent. I know people that literally only play supply and demand, guys. And they win like fucking crazy. It's unreal. So here's one. From here to the bottom wick. All the way across. I make this the right size. All right, so there's that most recent one. Here's one. Wick down to the candle. Which is about there. So how do I know this is a real supply and demand zone? Well, it tested here. What did it do? It tested here, here. It consolidated in here, broke it. Then what? Wicked off of it here, wicked off of it here. Then what? Wicked off of it here, reversed in here. What's it doing? It's breaking it. So now the next zone that we could potentially see is, if I can get it on the screen, is right here. And look where it's at. The recent daily low. And how do I know that this is going to keep going down on the daily? It's divergent, yes, but where does it start? Inside the volatility band. Which is why I have told you guys daily on GBP USD, it's going to continue. So it's going to keep shooting down this week, this month, until it gets into this supply zone. So now that we see that in the daily, let's go to the 4 hour. What do we see in the 4 hour? Nothing insane. Do you guys see divergence? I don't.
No.
I mean, it's back here, but that's so far, bro. That's not even worth it. On the daily, if there's no divergence here in the daily, then you cannot consider going on the 4 hour and be like, oh, look, it's divergent all the way back here. That doesn't mean shit. It's not going to do shit for you. You need to go like the recent few weeks, not like all the way like back last year. That's not going to do anything. You would need to do something from like here or the farthest here. And there's nothing there. So what does that mean is that it just broke a low. It broke this low. It needs to go back up for a retest. It's in the oversold zone. It's throwing that shark fin. I don't know the clean patterns yet, so we're going to go out to the hour. It's not the best divergence here on the hour. Let me see this. So it is a little divergent here, meaning that we could potentially see a nice pullback. It could come down for a nice little W, shoot up towards that water, bounce off of it, and then continue back down. All right, so that's how we're going to be looking at GU for the week. And if you want to go to the 15-minute, the 15-minute is nice and divergent. It starts here, ends here. But all we need to do now and make sure this is right, you need to see a pattern. There is no pattern right now. So you have to come down for it to retest this low to not break it, or it can break it, but it needs to remain divergent because GBPs do that. It could break it. If it's divergent still, you're looking for it to shoot up, break that water, come back down, retest it, and ultimately hit that Maya, which will be where? In that supply and demand zone. Hence giving you more structure. Make sense?
Yes, sir.
Dope. All right. So does anybody have any questions so far? They want to see me draw up another mark? Do you guys want to draw something up? I'll let you guys take over the screen. You guys can test that out.
One question I have that's not related to this is with
Yeah.
sauce. I know usually when you catch sauce, it's usually going down. Can you catch it going up as well, or does it not work that way?
Yeah, no, you can catch it going up. It just all depends on the trend. The reason being is a lot of the pairs have been dropping, I guess, especially like the USD pairs. So majority of the time they've been sells. But if you go back in time, like look at the hour, the 4 hour on like one of the pairs. Let's go to like US. Let's do Euro USD. See, there was this zone, right, that I was in for 1, 2, 3 months. We go like to the hour. Here's the uptrends. Let's see. Here's one. It's not the biggest one, but that's sauce. Railroad.
Yeah, I see it.
Yep. Here's I wouldn't use that one. That one's too long. What else? It all just depends. But they can go both ways. Just the majority of the pairs that I look at have been going down. So that's the majority of what we're going to be looking for. And that's how we would dictate it. But it's the same concept going up as well. You can even look at it on the lower. That was the hour? Oh, I thought it was on the 4 hour. I mean the 1 hour. Duh. That was the 4 hour. Let's see if I can find on the hour. It's a railroad, but it's not the best one. Here's one. Right off the ketchup and the water for the perfect sauce to go straight up. Here's one. The Eat Morning Star as the sauce. Here's one.
And when you see that, what exceptions would you make to not continue with that trend, if that makes sense? So basically, when you see sauce, what exceptions are there where it won't continue going where you want?
Depending on the size of the candlestick, or where it's at on the chart. So for like here would have been acceptable. I mean, it all depends because this is also hitting a support zone or a supply demand zone. So it was hitting that. I believe this was news because euro doesn't really move that hard. So it could be with news, you wouldn't trade it because if you're uncertain, it could go the opposite way. It's all dependent on, the analysis or the fundamentals of whatever happening in the world at the time that could dictate it. Because this is a strictly technical trade. This does not obey if there's news. Let's just say the dollar, in this case, it decreased. Let's say it increased. Or did it increase? No, if it's increased, it would have shot down. So it all depends. But mainly you want to look at if it's in level 3. And the best way to find that is if the EMAs are really spread apart. So this one here, even though it shot up and it was sauce, it still would have been questionable because of how wide the EMAs are, and that it's hitting a resistance zone and there is news. So this would have been an occasion that I wouldn't have traded it because of the times of what it was happening. But in this case, it did play out, and sometimes it does do that. But you have to make sure that the news is in coordinates with that. If you would have seen that the dollar decreased that day and something was actually affecting it, you could have added that to your indication list of, hey, this thing's going to shoot up. It could have added to it. But you kind of want to stay away when the EMAs are really wide and when the EMAs are really tight. When they're just starting to spread out, that's when you can look for it. When it's reversing and it goes through the EMAs, you can look for it to possibly become, between the sheets, which is when it bounces off the water and the ketchup together and goes exactly to the mayo every time. So those are the times I wouldn't trade it. When the EMAs are really tight or really wide apart, indicating very volatile movement, and it could shoot the opposite way.
Got you.
Yep. Let's see. So that was on the hour. Let me draw this. Why can't I delete this? There we go. Cool. So let's look at this 4 hour. Let's look at GU right now. Or this is EU. From here to about there. There's a whole zone. It's supply and demand zone. And look what it hit. Wicked right off of it. It's not divergent though. But it is hitting that supply and demand zone / resistance. So this thing could shoot back up. Like so. It's in a fringe. It's in a fringe. Here to here. There. Here. Why I drew it this big because the candle, the wick started up here and it closed down here. So this whole zone, and look what it did. One, almost, 2, 3 times it wicked right off of it. So if this shoots back up, guys, and this is still in consolidation, what's the first area it's going to go up to hit if it's on a big time consolidation? Back up to there, potentially back down. But we have to be careful because this is also in the oversold zone. So we can kind of break this down in the hour. It is divergent going up, which I like, but this is not thrown a pattern yet. So this is Euro USD. I want Euro USD to drop down tonight back into that supply zone, retest this low, come back up. It needs to break that water. So it needs to come down to here, right? Once it breaks that water, it needs to come back, retest that zone, and then go up to the Mayo. That's the only way that's going to work. And if it does do this, this would be a nice little inverted head and shoulders for the rise. And this is where patterns mainly form, is when it's in fringes. So if this actually happens, this is 100% mainly going to be, shot up to this zone. The next zone that it would potentially hit would be delete this, would be this right here. That most recent resistance zone, which should line up with the Mayo or the 144 by that time. So does that make sense?
Yeah, it does.
Sweet. All right, does anybody have any other questions on that? I think this is going to be useful. This stuff is just another indication to add to it. Now, I don't use it all the time. Sometimes you don't really need it, but it does give you structure. And if you guys still need the eyes for it, you can use it and draw it out. It definitely helps. Or you can just kind of just draw your supply and demand zone by lines and just be like, oh, here's this, and I have potentially this zone by just looking at it without having to draw it, and just understand that it could reverse in this area. But obviously, you guys could draw it out first. It's better if you see it, and then you get used to it. What is going on? So, cool. Now, does anybody have any questions not related to supply and demand? What? Nobody?
I was late coming in, so I don't know what you went over or not.
Oh, what did we go over?
No, I'm saying I was late coming in, so I don't want to ask a question that you might have already went over.
No, dude, go for it.
Okay. All right. So when I'm looking at like the 1 hour, 4 hour, I see setups, but every time I get an entry, I have like massive drawdown, and I'm not really good at picking, I guess, where to enter. Like I'll try to look at pullbacks and things of that nature, but then they'll continue to go up on me or go down on me.
What was your last entry? That you went to massive drawdown. You don't like whatever.
EU.
AU?
EU. No,
oh.
EU.
Okay. Where at?
Oh shoot.
Show me where it's at. Let's see if I can help you explain.
Let me see. I would have to go look at last week, to be honest.
I'm looking at EU right now. Do you remember by looking at my chart where you potentially entered? If you remember the setups and the patterns, because this is all last week here. You probably went to a sell.
Yeah, I did.
Okay. The only way I can see it is if it didn't form a nice pattern. So you said last week?
Yeah.
So it's Monday.
Maybe around like 1.165. Maybe like around July.
Looking at 1.165. 1.165. Say about. So you entered around this. Is that right?
Right.
So what were you looking at for this potentially being a sell? What were the market conditions? Because I can see why you probably took a sell. I mean,
Yeah,
but
I seen first I did like I entered up at the double end when it was going down already. And then
okay.
I tried to keep stacking. And then it went and it did
So
that pullback and it went
resold
back
right
up.
here.
Yeah, correct.
Okay.
And then it just kept going up.
So one of the reasons is, I'm trying to think, it bounced off this trend line. Let me look at this. And this one is a little hectic. So a main reason why this happened is because it's in a massive fringe, right? So if you look at this potential zone, this entire zone has been rejecting the entire time. So if we look at the 4 hour, for instance, you could literally have drawn this. And this is valid. From here to here, we didn't go over this, so you wouldn't have known. From here to here, supply zone, shit, you give it the daily. Where it's going to it's just the fact that it's in a choppy position. You entered
So I
right.
just shouldn't have traded it.
Look at all this. So this is the high. This is the low. Look where you traded. You traded right in the middle. And what do I tell people?
Don't trade in the middle.
Don't trade in the middle. It's no man's land because anything could happen. And especially it's in the fringe. So when it comes to market conditions, anything can literally happen because there's no trend. So it wasn't that you guessed wrong because I'm looking at it. And it does make sense as to why you would have taken the sell. It retested a zone. It hit the water. It was a drop. It was good. And for trend purposes, it would have been a nice reentry. But because it was in a massive fringe, all that you have to reconsider and kind of double check and be like, okay, it's in a fringe. It's doing this, but where's the most recent low? It's right here. It's right. It's also retesting this low. It didn't break it, and it's hitting this trend line. Because by the time if you entered right here, that means you would have had to have seen it entered on this trend line unless you didn't draw it out. So it bounced off a trend line, it bounced off a support zone, and it's within a supply and demand zone. All indications, especially since it's in the middle, that this thing was going to continue up. And on top of that, let's see, this is right there. It was divergent. It was oversold, and it hit a stagnant straight line. And because it's divergent outside the volatility band, left shoulder, head, it shot up. Here's the most recent high. And I remember this trade. This was the beginning of last week. I said this was going to be a continuation. I remember this trade because last week, this was Friday, so it's Friday. Yeah. Let me see. Monday. So this is Monday. This is Sunday, Monday. This is Monday. Sunday, Friday, Thursday, Wednesday, Tuesday, Monday. So you entered in on a sell on a Monday, or Sunday, Monday. You entered in on a Sunday, Monday, false move week beginning up to trap the buyers, and then they shot back down for a little triple top action. But on top of that, I did have this for a back towards the upside. I think either retest this water and go back down, or it's going to come back up to the high and then continue against. In this case, it did. This is the most recent high. It broke it, and it formed that right shoulder for a little tiny inverted head and shoulders, and then it shot back up. So it was just a simple. What you did is technically right, but because of the markups and because of the technicals of it being in a fringe, it messed with your analysis. So just understand when you're looking at when it's in a fringe like this, get more technical, draw out your trend lines, draw out your support resistance zones, draw out supply and demand, because that all dictates what happens within the middle of a fringe. So it was just a little mistake, that's all.
So say if I were to draw it up right and chart it, what is the best way to get a good entry? Because I remember you said I should enter on a 15-minute. So when it's down on the 15-minute, what exactly am I looking at to get a good entry?
off of the second leg W, second leg M, the right shoulder. In this case, you could have, if you would have bought, I mean, it's a little different. So I'm trying to find like a good entry because this is all on a fringe right now. The only way you can really trade a fringe like this is if it comes up and retests certain zones like this. So like if you would have seen the supply and demand zone that we have drawn out here on a higher time frame, and you would have seen it wick off of this, I would have been like, yo, sell it. So either immediately as soon as it touches it, you can sell it. You can wait for it to consolidate like this for a little bit, right? Because that's a mini head and shoulders, actually. You actually look at it. So let's go down to the 15-minute. Ready? I'll show you. Highlight this. That's July 25th. This one. Oh, I actually remember this call. Does anybody else remember this? We called this for a sell right here. That massive drop. I remember that. Shit, that was 2 Thursdays ago. Here, you would have entered, right? So you have the left shoulder. You have the head. I would have entered as soon as this wicked like that. I probably would have entered right about here. Reason being is because of that railroad, right? So if you look at it, it wicked and it threw a railroad right exactly where the right shoulder should be. Okay? It was divergent here. It was oversold, wow, can't even draw a straight line or a diagonal line. It was overbought, divergent going down, and this was going up. So, and it was a retesting of resistance / supply and demand zone. More indication to look for sells. So you look for the sells. You have the head, the left shoulder of the head. All you're making sure of is just if this rejects that high and throws a pattern that you recognize like a railroad, evening star, morning star, you look for that precise entry. Or you can wait for what's called a shift candle. I mean, I don't really teach that a lot because I don't really use it, but it does help. Is if you could look for a shift candle, and the shift candle is when that mustard, which is this yellow line, this yellow EMA, crosses beneath, because we're looking for sells, the catch-up, which is the 13 EMA. So if you see that the yellow or the mustard, technically, crosses the catch-up below, that could also be an entry. So in this case, it sold, or technically you could have entered as soon as this crossed, which would have been around this area. Meaning, the most drawdown you would have went through if you would have entered this correctly is 12 pips. And then you would have made 18 or 75. If you missed this entry, you could have entered on the retest of this week. Because normally, so this is something that you guys are going to have to get used to. I can tell you this, right, and it makes sense, but when it's live, you don't know what to think because it's happening so fast. But what you need to understand, especially if you would have, because I know plenty of people that entered on this sell right here. How do we know that we're going to be doing that? The reason why you would have entered in, even though at one point this entire candle was blue, the reason why you would have sold this is because you know, on a technical basis, this is hitting a high, it's hitting a supply and demand zone, it's hitting a resistance zone, it's divergent as shit, it's throwing a head and shoulders, it already made the drop and took out the low. This was simply just a retest or a stop hunt to see if they can go for one more shot at getting more buyers trapped. And that's exactly what they did. And if you understand that psychologically, you would have been knowing sell, 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 because this is selling everything else is telling you it's going to be a drop. So that's another entry, is if you see during news stop hunts going against everything you just said and you just continually sell it as re-entry. This is where you have to be so certain on your analysis, and that's how it's going to make you more of a confident trader. I was 100% confident that night when I marked this up that it was going to drop. I knew it was going to drop. So all this, if I would have trading and I was watching the news, or if I was watching the charts that night, I would have re-entered, boom, 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 boom. It's going down. And look what it did. It reclosed through that do I would say a railroad, shot back down and continue. So the entry is here would have been right after that railroad formed, or right on the wicks of a downtrend that you know is supposed to happen, or the ketchup and the mustard right here. So you see how it finally crossed back down. You could have entered in on that sell and just let it ride, knowing that you're going to have potential drawdown. Does that make sense?
Yeah, that makes sense.
Another thing that you could do, like right here, this whole zone right there. 3 reasons that you could have bought this at the low, or after it done it twice. 1, it bounced off a trend line and a support zone and a support line. 2, it was divergent. Price was oversold with a shark fin appropriately going up to affirm that this was going to be an up, right? This was going to be a completely shot back up. So it's divergent. It retested the trend line and the support zone, but not only once did it do it, because we look for perfect patterns, right? We're not just going to, it bounced off it and do it because it needs a form of pattern. The entry that you would have put right on this would have been right here, right there. Why? It wicked right off of the support, off the trend line, off the supply zone, and it's divergent. And guess what? It never broke it. They may have wicked there, but the physical candle never broke it. So this is all entries. You could have entered here. You could have entered here. All of that. Because of those simple technicals. So all your entries would have been right on the right leg. You want to make sure there is a W. You never enter on the first hit on one thing ever. Because this could literally shoot up like it did and then continue to go back down. The only way you can look for entries is if it comes back down to retest that first initial low. This is why I tell you guys, when you're looking for these entries on a higher time frame, that EU, gold, all the AU, like AU, GBP, USD, they throw perfect patterns. Well, not GBP. Euro, USD, gold, AUD, USD, UChief, and UJ all throw good patterns. M's, W's, head and shoulders, which require retests. They all require retests. So you would have to physically wait for this to come down a second time, knowing that they have to do that. Rarely are you going to see this hit one time and be like, oh my God, it's going to be a buy it right now. You never do that. Always tell yourself in the back of your mind, it has to retest. It's like a law. It's not a law. I mean, honestly, anything could happen. But your best entry, if you're trying to be a consistent trader, is on a retest. You do not trade it unless there's a retest. If there's no retest, you have nothing telling you why to buy it or sell it right there. You are guessing. Or you got a signal from somebody else and you're trusting them. Because you need to know every single time that you're going to lose, or why you lost or why you won. And if one of the reasons is not because it was on a retest, then you just failed. So this is where you have to become a little bit more patient. Unless you were knowing ahead of time that it was supposed to drop down here and you placed a pending order. But I know a lot of people do that. They'll see where the trend line is, they'll see where the support zone is, and they'll be like, I'm going to place multiple pendings in this little zone right here, just in case it comes down and touch it and I'm not awake and it's going to go back up that way. I know plenty of people that do that. So you could do that, test it out, start throwing some pendings in zones in trend lines and support lines that it's supposed to hit. But you're always going to be looking for a retest. That's why the right shoulder here never really comes up to break that high, but you understand that the right shoulder is always going to be lower than that high. So when it comes to head and shoulders, you just have to understand that right shoulder is valid if it doesn't break that high. If it doesn't break it or doesn't come up to wick off of it, it's a head and shoulders. That's the right shoulder. It's valid. Sell it. As soon as there's no break, you're good. And in this case, it wicked up through that railroad. My entry would have been right here. Would have been a little bit in drawdown, but overall, long term, I was right. Because it didn't break that high. So the entry game, even though I just told you exactly where it is, it's not a sign. Like literally, you enter on the second leg of an M or a W. Literally, you only enter on the right shoulder. The only way you're going to understand that is by physically doing it. I can't tell you exactly at what point it's going to be a buy or sell. I can tell you when I bought it and sell it and give you the reasons why, but there's never, ever, 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 ever gonna, or I can't even say ever. You just got to understand you're never gonna have a perfect entry like that. Like you may catch some sometimes, but there is no such wizard out there that's gonna allow you to grab an exact moment every single time and be perfect without any drawdown. You're just gonna have to accept that fact. But when you grab it and you understand the overall structure of the market, you understand the patterns, you understand the retest, and hit that trend line, it's going to go this way, there's no reason why you should deny yourself from entering a bad entry at all. If you got a bad entry and it's going against you, you know what I do? I stack. I re-enter in the same direction, understanding, hey, I got a bad position, but I know where it's going to go. I'm 100% on my analysis. I'm going to keep re-entering as it goes into more drawdown, because when it goes in the right drawdown, after all those re-entries, guess what? Now I have better entries, better trades, and it's going to make up for all the bad entries and the negative. And when they all go positive, shit, it's like I just made one big, massive lot size, and I'm about to rack out even more. Does that make sense?
No, that makes sense.
It's just a lot. Most of this comes from experience. That's the hardest part about trading. Is like I just told you, it's M's and W's, right? The second leg, and then the head and shoulders, the right shoulder. You're always trading that, but you won't be able to like hear me say that and then just see it happen, because you're always going to have this in the back of your mind. What if it shoots up a little bit higher? What if it does this? You're always. I can tell you all this shit right now. You're still going to do it, because this takes years of practice. This literally has to be engraved in your own mind by you physically doing it. You will start to notice how certain pairs move, and you'll start to notice the exact patterns that they move. You can buy the best training in the world. That somebody that charges $20,000, they'll tell you exactly where to enter every time. I guarantee you'll still go into drawdown. I guarantee you'll still have the, what if it does this? You're going to have it. It's impossible not to have it. It's just about understanding your own analysis and knowing that it's going to go against you sometimes, and you're going to have to look for re-entries as it does it. Pull your profit, take the small loss, look for a better entry that's going to give you more of a confirmation that's going to drop or buy. So that's why that's what I do. If I get a bad entry, I understand I do, I'll re-enter. So I grab better entries.
Yeah, that's all I need is repetition.
That's it.
When you re-enter,
What's
are
that?
you changing your lot sizes when you re-enter?
Yeah, so you don't put the same, whatever size you came in on, don't re-enter in the same one.
Are you doing larger or smaller?
You would do smaller, ideally. So like some people I know, they'll come in, they'll place one big lot size, and they'll be wrong, and then they'll come in, like let's just say someone plays like a 5 standard, they'll start placing 5 standards, right? They have a 5 standard lot, it goes negative, they'll start entering on 1 standard. 1, right? So that's one way to do it. Or if you want to be conservative, you can enter on a small lot size, understanding that you are going to go into drawdown, and as it goes into drawdown, because you know it is, you can place bigger lot sizes or the same lot size, depending if it's a small one. Like it needs to be proper risk management, right? You don't want to just go and start placing random lot size because it goes negative. If you place the big lot size and you know it's going to go negative, you always place lower. So either lower or the same lot size, never more, just for risk management purposes, unless you guarantee and you have all the perfect analysis that you know it's going to drop, and you just saying, fuck it, let's start throwing some higher lot sizes because I know I got a bad entry. Then, I mean, that all depends on you as an individual. But if you want me to be technical and be risk disclaimer type person and safety, like you're going to, I'm just telling you, smaller lot sizes are always better. Just re-enter on a shit ton of them. Otherwise, I'm not teaching you guys the right shit. Yeah, just fucking place it. You place a 0.2. All right, I need you to place a standard as it goes more negative. Like, that's just bad risk management. That's horrible.
I hear you.
Yeah. So, all right, cool. Well, all right, guys. It's been all over an hour. I did owe you guys that, so I appreciate you guys bearing with me as I made that trip across the country. We will have our next training on Sunday or Saturday. I'm sorry. And we will get this recording going too. So this is a good video. I actually like this one a lot. I'm going to post this up in YouTube, post in the group as soon as it's done. you guys can use this and reflect on it. Save the videos too. Make sure you guys really save these links because nobody else has them. And if I ever put together like a course or something, these are the videos that are going to be used in the like everything I'm giving you right now. Like literally just going to be massive webinars of all of it. So, does anybody have any other questions? On topic or off topic, doesn't matter. No?
No, sir.
Cool. Well, then we're going to have our group chart analysis tonight, guys. From there, we'll get this week going. I know I missed yesterday, but I was sleeping all day. And we'll get back to this grind. We'll catch some good tips this week, and we'll start understanding what's going to be going on. And now that you guys understand supply and demand, you should have a better confirmation of where direction is going to be going. So with that being said, everyone have a great week. I'll see you guys on the analysis later, and let's kill this thing.
You too. Thank you.
No problem, guys. Peace out.